Hello and welcome, I'm Suyash Maheshwari and you are watching Last Tick here on News9 where we break down the day's action on the Lal Street. And Indian markets, they have kicked off the week on a rather somber note as Nifty gave away 160 points and Sensex ended with cuts of over 600 points. Now the broader markets, I think they were especially worse off, and the small caps, I think that is where the real story is playing out. The small cap index corrected almost 2% to close at its lowest level since January 24th of this year. The index, by the way, has now corrected 8% from its recent peak, from its record high levels, and 4.5% in just 1 week. Is this correction going to last? I think that is the real big question, and if that is going to be the case, how much will some of these stocks that have delivered multi-bagger returns, how much will they correct? To get view on that, let's also bring on board Mr. Sudeep Bandyopadhyay, Group Chairman at Indie Trade Capital. Thank you for joining us on News9, Mr. Bandyopadhyay. Always a pleasure speaking with you. And over the last couple of weeks, sir, ever since that warning bell from SEBI and AMFI to fund houses, concerns regarding the valuations of broader markets, they have intensified. And the small and the micro cap stocks particularly have taken a beating. We were discussing it, discussing this topic just 10-12 days back when you were on the show, and then you had expressed caution about the valuations but suggested that the broad-based rally might, not be over just yet. In light of the recent developments, is that still the view?
Absolutely, that continues to remain the view, Suyash. I think, what is happening is, this warning bell, which I was trying to ring that day, is being rung by multiple players, and it's becoming louder and louder. SEBI is ordering the mutual funds to take a stress test as far as the small cap stocks are concerned. There is a report which has come out from one of the reputed research houses questioning the valuation of the PSU stocks, and that uses words like unrealistic and beyond understanding certain valuations.
Right.
The PSU banks, the rally in PSU banks, some of the research reports are questioning the leading PSU banks valuation and possibility of it going any further from here. So I think generally a bit of caution is creeping into the market. It's not a bad thing to happen, I'll tell you, because we were really moving too fast and in a lot of cases without the fundamentals catching up. So bit of consolidation around these levels, bit of catching up with fundamentals, bit of time correction, I think is warranted.
Right.
Look at the PSU space. I think these I had specifically been cautioning investors regarding the defense PSUs and the rail PSUs. Now, this is a fantastic sector. Both are fantastic sectors. Government of India's focus is on building rail network the way it has never been, and same as Defense Make for India, which is a game changer for India in the long run. It's a great opportunity. But what happened is the valuations of companies in these sectors ran so much that they became unrealistic. They are good companies having large order book, which will help them over the next 5-10 years. But the valuation became unrealistic and some amount of correction was warranted.
And as you pointed out, sir, this bearish report, by the way, was put out by Kotak, and they are basically advising investors to book profits according to them. Valuation methodologies in some of these PSU stocks, especially the non-finance PSU stocks, is rather incorrect. And this voice, voice of caution is just getting louder. In the last couple of weeks within the investing communities. This sudden reversal in sentiment, sir, reminds me of what Warren Buffett once said, you only find out who is swimming naked when the tide goes out. What's your overall sense and assessment of this sudden shift in sentiment? Because we were talking about, the future potential of some of these PSUs, but now we are saying basically the earnings is not reflecting, the high order book.
I think there is no doubt, in anybody's mind, at least not in my mind, about the potential of these PSUs. Let's take the case of defense PSUs. Now, the kind of order book they are accumulating, the kind of potential India has. India still spends only a fraction of its GDP on defense, and it's bound to go up with the way geopolitical things are shaping up. Of course, there is also an export opportunity which is definitely there, and this is an overall good thing to happen for the country. Instead
Right.
of importing arms and weapons, we are doing it ourselves here. I think it's a fantastic thing. But the question is, the valuation, the way it went up, was unrealistic. Now, let's say a defense contract comes. Now, this contract submarine contract has come to a company. I'm giving an example. Now, this submarine contract, the moment the contract comes, I think the market starts getting excited and the valuation moves up significantly. One has to remember that the submarine delivery takes few years, and the profit coming out of that contract will be spread over a few years, and it may start coming in from 1 or 2 years down the line. Now, these realizations have to come to the market and before they start, pushing up the share prices to unrealistic level. So, whatever valuations we have seen, they will come even after some time. But the time correction, so that the fundamentals catch up with the euphoria, I think that we have to wait. It's a matter of time. It was a matter of time before this correction happened.
All right. And certainly, sir, I mean, if you look at the investing patterns of foreign institutional investors, their holding in most of these non-financial PSUs that have not gone up. In fact, on a historical average, it has come down. So primarily, most of this rally was being driven by your domestic institutional investors and specifically and more importantly, I think, the retail investors. Now, of course, the retail investor base has grown significantly in India. We have just added the last 1 crore investors in a matter of 5 months. We are now at 9 crore. The investor base has tripled in the last 5 years. And I mean, are you concerned about, their high position of leverage? Because a lot of these brokerages, they offer MTF services which pretty much allows investors to take positions with the help of leverage. So do you expect that to have some sort of a domino effect when the chips ultimately start falling?
Not really. While there is definitely some leverage, but the leverage is not that high in the system for us to worry. And one has to remember that over the last 2-3 years, the retail investors have made a lot of money.
Right.
They will probably get some loss, and some of them will book the loss and exit as well. But I think that's, in any market, one should be prepared for that kind of an eventuality. If somebody has come to the market, market has some risks, and if you enter at a very high valuation, either you wait be a long-term patient investor, or you book your loss and exit. I think that's the option. I don't think there'll be too much of damage. A lot of sector rotation is happening. One has to remember, as you rightly said, the large investors have started moving into large cap shares, and that's a good thing to happen. And that segment, large cap segment, a lot of opportunities were there, and the valuation was also much more reasonable compared to some mid-cap and small-cap companies. So I think that transition is happening, and it's good for the health of the market. I will again repeat that.
And sir, certainly, I mean, this transition from the broader markets and some of these high-flying, momentum-driven sectors, the investors are moving from those sectors to large caps, the blue chips. But can the blue chips continue to rally at the time when the broader markets are drowning?
I won't say broader markets are drowning. I mean, this is,
Not yet.
one day it has come down. I don't think we will drown. I think, we may not see a massive pre-election rally because we already have seen the rally. But market will continue to inch upwards. That is what our belief is. Yes, at these kind of high levels, there will be volatility. And we have to be prepared for that volatility. That's pretty much what it is. If the rally was, let's say, supposedly of 500 points in any index you see, I think we have already consumed 450 of that within a very short span of time. So the 50-point rally which is left out will be spread over a long period of time. It's not going to happen in a day or two because market is already at high levels and some stocks do need correction.
right? Some stocks do need correction, and the broader markets, I mean, even though we are clearly seeing correction, they are not drowning just yet. The large caps, they could, potentially catch some eyeballs, but, pre-election rally, that is something that is rather debatable, and that's the word coming out from Mr. Sudhir Bandyopadhyay. Sir, great insights from you as always. Thank you for giving us time here on News9. But before we wrap things up, let's look at the top headlines at this hour. SEBI proposes implementation of T+0 settlement on an optional basis by March 28. Trade settlements will happen instantly on the same day. PM Modi announces extension of financial support worth rupees 10,000 crore to self-help groups. Support to be granted either as bank loans or via capitalization support funds. Not just this, PM Modi is also inaugurating 114 national highway projects worth 1 lakh crore. PM also inaugurated the Haryana section of Dwarka Expressway today. Delhi High Court issues contempt of court notices to the resolution professional of Go First Airlines. Court found that aircraft lent to Go First weren't being properly maintained. Beleaguered edtech firm Bajaj gives up almost all spaces in India. Company makes it mandatory for employees to work from home indefinitely. But it's not just Bajaj. Several Indian startups and their founders, including BharatPay's Ashnir Grover, Paytm's Vijay Shekhar Sharma, amongst others, are navigating a tricky space. What is going wrong with these once celebrated startups? Stay tuned with News9, as coming up next is a very special show on Business Plus, Startup Flounders.
You are watching Business Plus here on News9 Live. I'm Krishna Kumar, and the big discussion we have on this edition of Business Plus. Startup flounders of India. Beginning with Bajaj, a made-in-India startup which was once valued at $22 billion as the world's most valued startup. But now it's reduced to just $1 billion or even lesser. In fact, Bajaj's founder Baiju Ravindran is locking horns with investors in the company to remain on the company's board, to remain as the CEO of the company, even as there is a lookout circular for him from the Enforcement Directorate. And it's not just Bajaj. There are many. Ashnir Grover, for example, was recently grounded and was denied permission to fly to the United Kingdom. And this after November last year, when he was stopped at the Delhi airport while he was trying to fly to the United States of America. And now Grover is currently under the radar of Delhi's Economic Offences Wing for alleged misappropriation of funds. Delhi's Economic Offences Wing also booked Go Mechanics co-founder and senior officials of the startup in October 2023 with charges related to criminal conspiracy, fraud, and account falsification. The list just doesn't end there. Once the poster boy of India's fintech ecosystem, Mr. Vijay Shekhar Sharma is currently under the scrutiny of the Reserve Bank of India for Paytm Payments Bank. And these are just the latest names. It was earlier Housing.com's co-founder who was accused of splurging money on luxuries while the employees went unpaid. We're talking about Rahul Yadav.